One before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hey now, we got to be live now, aren't we? Live? That thing's a little bit hot too, isn't it? Welcome to the wonderful world of live streaming. There's a million things in the world that can go wrong with your equipment. That right there was something that they just did in OBS. I don't know how that possibly could have got changed, but you guys should be able to hear me right now, yeah? All right, well, after just a horrible start to the live stream, let's go ahead and see if we can dive in and maybe get a little bit of work done. Today we're going to start with SpaceX. We're looking at that 150 level. I'm not talking any fundamentals for SpaceX because no one cares. We're looking at the technicals now. The technicals are dictating policy, and it's going to be one of those situations where potentially we could be in an interesting spot if we had CFD market access. We were looking potentially to go short. Also, if we wanted to get a bargain buy. So we're going to look at those technicals as well. I think that we're going to be in a position to have an absolutely fantastic end of the trading week. We had a U.S. oil trade that came across the board. Sometimes a trade just comes together. Sometimes a plan comes together. Sometimes you have a real chance to make a lot of money on a trade. And I'll tell you what, I know we've scoped it for weeks and weeks and weeks. U.S. oil was no joke. That gap area from 69 produced exactly what we thought it was going to produce. So I'm going to go ahead with a trade update there. We have a couple of twin earthquakes out of Venezuela that are big. The reason why we're going to bring them up is there's a lot of speculation that maybe the next one that's going to hit California. I know everybody says it, but the entire Pacific Rim has sort of gone off in the past 48 hours with earthquakes all over the globe. And then also the Kilauea volcano, which I've seen personally down there in Hawaii, is also extremely active. A lot going on that front. We're going to cover that because even though it's a geological event, it could still bring price action. Believe it or not, a major catastrophe at this point in sort of the economic recovery, the post-war economic recovery here in the United States could be absolutely staggering, especially if major centers are hit like California or maybe even some other cities that are on the West Coast. So we're going to talk about that briefly. Euro USD performing well, not quite up high enough for my key level just yet, but that 113.50 level is looking pretty good. NASDAQ 100, we missed a short from 30,000 by like 12 points. Absolutely frustrating. We're going to look at that as well. And then also the US dollar, Japanese yen, it's all about 162. As always, if you have any markets that you'd like me to look at, go ahead and throw them in the live chat. I will be sure to do so. I also posted a link out there in the YouTube chat where you could see, sort of our three biggest market drivers for SpaceX, and if you're interested. So I appreciate everybody sticking around after the technical difficulties. There is no worse way to start a live stream than to have technical difficulties, but honestly, sometimes you just don't know until you fire these things up, and unfortunately, that's sort of the world we live in. Big tech, seems like we spend half our time troubleshooting. So good to see everybody. Jason Max and Mike check. Yeah, Mike check 1, 2. Is this thing on? All right. I think we got an opportunity now. Tina Jin, good to see you, Tina. Going up against SpaceX, I don't know. We're looking at the technicals right now. Bobby Bob, good to see you. Thank you for weighing in. If there's ever a problem with the sound, guys, just get in there, or the video's messed up or something. Just drop it in the live chat. That's the fastest way that I'm gonna be able to see it and fix it. Catmandu, good to see you. Good to see you, Cat. Been a while. All right, right on. Okay, guys, SpaceX is going to be where we start our discussion of the markets today. SpaceX IPO, we've just been covering this sort of ad nauseum for the last few weeks. You guys are probably tired of it, but it's really important that we look at what's happening right this minute. This is really an ugly scenario if you're a bull. If you're a bull and you got the institutional buy-in from 135, you're still in the green. Right now, the game is 150. And we talk a lot about key levels. Key levels are everything when you don't know what something's worth. They're everything. Like, let's say, for instance, I want to sell you my phone. And, you don't really know much about my phone. You only know what it's worth to you, right? So you're thinking, well, maybe I'll give you $50. Maybe I'll give you $100. And if I don't know what my phone's worth on the open market either, maybe it's a new one, maybe it's a brand new one, maybe it's a really old one, and I don't know what exactly this is worth, then you and I go back and forth. And the way that we go back and forth in a wide open market typically is by key numbers. So I'd say, okay, I'll give you $50 for your phone. I'll say, no, I want 100, fine, 75, we're gone. Now that's a very basic open auction format. And what we're doing here is much more sophisticated, but still understand the power of key numbers and big round numbers, especially if you don't know what something's worth. Nobody really knows what SpaceX is worth right now. I've talked to people that have it at 500 by Christmas. I've talked to people that think it's 30 by Christmas. Nobody knows what exactly is going to happen here. We do have a pretty good case for the bullish side of this market. However, things can change rapidly. Is this thing overvalued to begin with? I don't know. But I do know this. Process of price discovery says that gaps get filled, gaps get filled, gaps get filled. Believe it or not, this area between 135 and 150, where the institutions and the smart money got in, right down there, the folks that got in Thursday night before the IPO even hit the public market, okay, they're sitting at 135. The public, the basic people like me and you that could buy in on Friday, we had an opportunity to get at 150 because the market did retrace. Maybe we're in at 152, 155s. That's who's in the fight right now. Institutions still sitting pretty well. Those folks that bought in on that entry, boom, okay, there it is. There's the big run up, and now there's the big come off, and now we're sort of just stagnating. We're compressing right around 150. That does not look good if you're a bull. So the way that I would break this down with my technicals, Fibonacci right there from that spike high up around 225-ish, somewhere in that zone. It's not a coincidence that 225 is your high. Big round numbers. Learn them. It's absolutely important. In any case, something like this, nice big bearish move, and there's your L formation. L formations are bearish. P formations bullish. L formations bearish. That's all there is to it. So what do we have here? We've got an L. Boom, boom. Haven't retraced over 38%. The downtrend that really began 3 days into this thing is still very much in effect. The part that I'm really concerned about here is the compression. We're testing that 150 every day now. Right now we're at about 151 and a quarter. It looks to me like this market's really going to fall away down to 135. For me, a little bit of full disclosure. The area that I'm looking at that I potentially would be interested in, I'm looking somewhere down here, 125. Somewhere down in there, maybe 125 to 100. I anticipate a lot of bidders to be located in that $25 section. Is that a pretty good play for you? It depends on what you want to do with SpaceX. For me, a 125 would be a buy and hold. I would probably be looking to hold probably through this fiscal year, so I'd be looking to cash out more than likely next fall. Not this fall, but next fall of 2027. I don't know that I would be wanting to hold SpaceX after Trump is out of office because, believe it or not, and listen, whatever you think about it, more than likely, the government contracts that have been promised to SpaceX, and there are some, those are going to be upheld. I would be surprised if Trump canceled all of them. I think his sort of deal, his feud with Musk was short-lived, and I think that you'll see that become a big thing. Now, 2028 comes around, and you have a new administration coming into the office, and all of a sudden, maybe they're not Republicans, maybe the Democrats win. Then you could easily see a lot of Musk's contracts canceled just because he's Elon Musk and he owns X, and he came out and really went to bat for Trump in the last election. Believe me, all of those things are very, very possible. So I think I would put an 18-month hold on this thing, 2-year hold. I can't give you any investment advice. That's just what I'm thinking in my own head. Why do I want to wait for 125? Because I want to see 150 get washed out. I want to see 150 get washed out. I want to see if the public's still buying this stuff down at 135. I have a feeling they won't be. And then we're going to start talking about 125, 100, maybe 75, something like that. The long-term case, though, at least for the next 2 years, I would be hard-pressed to really say that this is going to be a bearish stock. I think there's way too many announcements that can be made. Earnings, they're not going to really probably show you much in earnings, but Starlink is a big part of the business here. So maybe that earnings balance sheet does look good. It's all about government contracts, though, and what people believe can happen with SpaceX, with building AI centers in space, the Starlink business. Remember, SpaceX is already number 4 in selling cloud computing space. They're already selling space, partnered with Google. The upside's huge for this thing. The upside in the next decade is huge for this thing, but there will be some bumps in the road. And I'm not saying that this is a bump in the road right now. We are seeking an area of fair value. We're finding it around 150. That L formation scares the heck out of me. If I was holding longs, I would be, I'd say, well, if I'm in it for the long haul, I don't care. Well, that's fine. But I think as traders, we can get a little bit better price if we just wait a little bit. That's what I think. Let me see. SPX going up again. Yeah, the S&P 500 right near flat. Dow Jones is right near flat. Really a choppy, ugly session. Probably not the best day for like a 2-bar orb. Something like that. Let me see. 512 Eli, good to see it. NQ longs have been moving too fast to catch. There you have it. Can a bull run be anticipated for NQ like yesterday's close? Yeah, we'll go ahead and we'll take a look at the NASDAQ. I'm more than happy to do just that. I think that the NASDAQ's certainly a big mover and a shaker. This was one of the trade ideas that we had out there that I was really confident about. Let's go ahead and just take a look at the trade idea was the NASDAQ 100. We were looking to sell 30,000s. And I believe my entry point, my key level, I can't say entry point, but my key level for instance, was 29, I believe 975, 29,925, something like that. It's too small for me to read. You probably can't read it either there. But you can on the trade ideas that are released in the How to Trade trading room and on X at ShaneV_trader. We'll take a look at what we had today. I mean, it was really a beautiful trade. We knew that the market was going to rally and it was going to check 30,000 out. We'll take a look at this high. What's today's high in this NASDAQ 100? 29,963. That's the NAS 100 CFD. So right there, we were looking probably for about another 12 points to 75. That's frustrating. That's really difficult. Take a look at the 30-minute chart. I mean, there it is. I mean, this is beautiful right here. Nice big rally. Nice big rally right there, 29,963. And then you get the big sell-off that comes across the board on the U.S. Open. I mean, that is fantastic stuff. That is what we're talking about. We're talking about getting short right up there. Then the big sweep comes in, essentially sellers. What do you think sellers have going for them right now? Retail sales, retail sellers. What do you think they have? They've got their back up against 30,000, and they're just getting comfortable holding shorts. So to me, the stop out's going to be right above 30,000, more than likely going to get some compression here. So the question is, for 512 Eli, can a bull run be anticipated for NQ like yesterday's close? Well, we'll go ahead and pull up NQ. E-mini NASDAQ futures. That's the continuation chart. I don't like continuations. That's a long story. I'd have to make a video out of it. I trade front month futures. That's where all the volume is typically. So 30-minute chart right now, intraday, NQ. What do we got? Let's go ahead and pull up our market profile. Point of control. What's our point of control? U.S. session point of control, 29,672. Okay. Do we want to buy that right now? It's been had. We've been trading that thing all day long. If you wanted to buy it, you could. That area right there, 29, 675, maybe you could take that one. So the question is, are we setting up for a rally? Well, guys, I mean, this is market profile 101. It's a B formation, uppercase B formation. So what does a B formation signify? You've got a value area up here that's been traded a lot. You've got a lot of volume down here right around our point of control. What about right in there? What about that area right in there? That's where the chain gets thin. Let's go ahead and have another look. You see right there, this area right in that zone, that rectangle. Let's go ahead and draw this rectangle real fast. This is a fantastic setup, essentially, to fill in what's called a thin chain. What happened on the open? Market crashes, right? Now, I know we're getting in the tall grass, but just go with me, right? Market crashes. What typically happens to every price point in the market? Gets traded. So we tried it right here, filled in a little bit of this chain. My guess is we're going right up in here to the top of this, maybe 29,953. So if you wanted to take this trade, Eli, number one, you've got to be sure that you dial down your leverage. What I'm going to do here is going to be incredibly expensive, but it still is a possible day trade. Maybe if you were a trader that had a legitimate sized, maybe if you had a legitimate sized, I don't know, what would you say, prop account? Something like that. So what we want to do is we want to go buy market order in Q. I don't know, where's our $5 a lot. It's not giving me an area to put my lot in. Oh, 1 unit. Yeah, see, they're just changing everything on me today. So what happens, your computer updates. Let's go ahead and buy the market right now. Okay, so if we bought the market, if it's ever going to get us filled so we can manage this thing. Okay, let's say we just bought. Now, what's got to be the game plan? The game plan right here is you're looking for a take profit somewhere right up in here. We want to see this chain get filled in. This real thin gap right in here. We want to see this get filled in. Now, you can already see that we're killing it. This trade's absolutely killing it. We're breaking up, right? Where would my stop loss be? If I'm an intraday tick scalper, I'm probably already gone. That means we timed it perfect. All right, and that's just luck. That's luck. I mean, we didn't have that plan until we just broke that down. Okay, so we're already up, but significant from a really astute trade management standpoint, market profile situation. I know not many of you understand what I'm talking about here with market profile, but that's okay. This area right in here is extremely vulnerable. Where are the sellers going to come from that are going to hurt us in here? They could be there. They were there a little while ago, back about noon Eastern, right? Now we're starting to head a little bit higher. Where should my stop loss be on this thing? Well, you could manage it just on the fly and say, okay, if it comes back to break even, I'm going to get out. You could do that. There's nothing wrong with that. That keeps you safe and can lock in some profit. But if you wanted a static stop loss, maybe a place where you have to get out, you probably could put it right beneath the point of control down here. Now, is that even worth it? It's a little bit better than a 1-to-1 ratio. So we could justify that, yeah, maybe that's worth it. What do you think our probability of getting this trade accomplished? Is the market going to run and fill us up right now? Probably not. It's a relatively slow market. This would be a day trade probably for the rest of the session. That's how much time I would be looking to give it, probably the next 60 minutes, 90 minutes, something like that, 30-minute bars, right? So you could certainly do that, but take a look at what happened. Now, this intraday traders, market profile people did the same thing just a little while ago. What happened here? Bang, wiped you out underneath the point of control, bounced right back up. That's the problem you run into with doing some of this market profile stuff is it's really hard to know where your stop loss should be. So if we wanted to do this and maybe say, okay, set myself up for a late day rally, we could go right beneath there, but it does change my trade. Now we've got to be looking for something maybe up in there, which sort of is your quintessential run to the top of the market towards the end of the day. Is that high risk? Well, I mean, it's not great. I really like this chain, though. This chain right in here, I believe, will get filled in. So let's go ahead and just let that one twist in the wind for a while and see if we can get any satisfaction. It looks okay right now, but to be brutally honest with you, it's a very slow market. Right now, we're right. What are we? US 100's down about 1%. So that's the CFD. Your NDQ, though, your NASDAQ 100's up about 1%. So there's clearly some tracking differences there. But what we really want to see out of this futures contract is we've got to see a little bit more from the bidding perspective because we really are settling down in a consolidation, which is right around that point of control. Sort of a crash course there in brain surgery. Market profile can be a really great thing. It could also be a really challenging thing to trade. No question about it. Takes a little bit of experience and know-how just to be able to read the tea leaves, but a B formation is pretty solid. It really is pretty solid. Let me see. Naomi, good to see you. Naomi, welcome. Hey, Shane, I've been watching your lives from my TV. Your lives are hard to your lives you've lives are hard to miss out on. Great. Love the one you did on the 5/8/13. Thank you, Naomi. We had a lot of folks that gave us some good feedback. I'm really glad you guys enjoyed that sort of crash course in the 5/8/13. Great strategy. Really a good one. Let me see. When you taught me that strategy a while back, it became my edge. Thank you. 100% welcome, Naomi. Sure love to hear things like that. We sure appreciate it. Be sure to drop me a line over at How to Trade. Let me know how your trading's going. I'm always happy to help. And if you have any issues or any challenges to work through, just be sure to reach out. Maybe we can help. Maybe we can help. That's for sure. Let me see. 29,950 looks nice for Eli. 29,950s. I mean, that would be a pretty good out. 29,950-ish. I mean, it really would be a pretty good out for this NQ right up towards sort of the beginning of the upper part of our, the upper value area. But right now the market's going against us. It's going right back down to that point of control. Let's just wait and see what happens. But for me, those are really tough to take without giving them the time to mature. This trade right here, I fully expect it to be okay, but we'll see. We'll see exactly how it goes. I'm not really too certain. All right, so let's go ahead and talk a little bit of U.S. oil because we were pretty certain about U.S. oil here. A little bit of a trade update. The S&B and BOE hold rates firm. The U.S. oil plunges, and this was a trade that I was waiting for a long, long time. We talked over and over and over about the gap area, and what that means for U.S. oil. Well, Iran war's everything. It's been very quiet. The Senate yesterday here in the United States voted to sort of limit the war powers, and now we've got a reversal of the vote. I guess Trump and Cassidy had a big meltdown. I think that would be hilarious. I wish they put those on pay-per-view so we could all watch Trump yell at people and them yell back. I think that would be must-see TV just because he doesn't really yell much on camera, but behind closed doors, supposedly, the guy's just a tyrant yelling at people. And you had a big vote yesterday that really limited the ability of the United States government to fund any further military actions in the Iran war. And it all sort of figures into our MOU. Our MOU that was signed, Memorandum of Understanding, still intact, peace, ceasefire still intact. And so what does all this mean? Well, I mean, the markets by the day are growing more and more confident that the war is probably over, right? Well, I'm not necessarily buying that. I think you're going to see more kinetic exchanges really focused. I'm personally focused on the period of time that occurs right after the midterms.
I think that could be absolutely a very delicate time in U.S.-Iranian relations and also in the Middle East. However, we talked about the oil supplies yesterday. We talked about decreasing week-by-week oil supplies. We also talked about what the SPR, the Strategic Petroleum Reserve here in the United States, looked like. And, it was getting empty. I mean, it's empty. You can start to hear we're getting empty. The SPR is at levels we haven't seen since 1983. A much different country, a much different world than the demand on the fossil fuel infrastructure is nowhere near what it is now. So when we're talking about 1983 levels in the SPR and we're at those same levels now, it means it's empty. You don't have much oil to play with there. And what the SPR does, the Strategic Petroleum Reserve does, it allows the United States to put a bunch of oil on the global stage to sort of keep prices in check. If you want to call it market manipulation, you certainly can. But what really needs to happen here is the Strait of Hormuz needs to get reopened, and the flow of oil needs to start coming out of the Middle East like it has, for the past, 60 years. Well, this is sort of what the markets are pricing now. We talked a lot about the opening war gap. Remember, oil is a commodity. It's probably the commodity, oil and gold. 3 rules to commodity trading. Gaps get filled, and gaps get filled. That's all there is to it. Opening war gap. We knew when that gap developed, we said, okay, it's going to get filled. It's going to get filled. We just didn't know when. And we knew that after that first week, we said, man, this thing's trading right up around 92. And then we exploded. And remember, up at 120, we came right back down. But 100, 120, somewhere in that range, it did not look like you were ever trading $68 again. But we have some experience. We've been in the market a long time. A lot of you have been on a lot of these live streams watching the oil markets, and you see what's possible now. We weren't really scared up there at 100. I said 68's going to get hit. We're going to fill that and test that area. It's just a question of when. So our trade idea was absolutely fantastic. It was one of those that really confident in. 69.09 was our key level. And you see today, it really came into play. 68.90. 68.90 was the sort of the hot number down there. That would be the weekly bottom daily chart. I mean, this is just beautiful stuff. Absolutely beautiful stuff. There was your low right there. Low today went right to 68.90. And a lot of people don't believe in Fibonacci retracements. Go back, check the live streams, check the trade idea. We've been working with the same sequence, the same Fibonacci sequence for about the last 6 weeks. And to hit the bottom of a market on a day like that, 68.78. What was the low? 68.90. That's within 12 cents. And that's on this U.S. oil. Might have been more accurate on the futures market. I didn't even really look, to be honest with you. Not today yet. This right here is absolutely beautiful. The high right now, we're printing about 71.84. WTI crude oil is moving to the top side. Today, we're up, up almost 2.5%, a little bit better than that. That's a great trade. That's a great trade. We were looking for 71.25. 71.24 was our next level. Could also be interpreted as a profit target, and that's about 250 pips, something like that, 215 pips. Fantastic trade. In my view, the trades don't get much better than that, and the reason why we're sort of breaking it down is because the hardest thing that we had to do to make this work was to stay patient. It was hard. We saw, this right in here was great. This strike right there about 79.62, that was great. And then some 50% action. I hate that. 38% was pretty good to us as well for a couple weeks. But the opportunity to trade the convergence of 78% with a gap, with an opening war gap, was fantastic. It was absolutely fantastic. A lot of traders asked me, said, Shane, if you're so convinced the gap's going to come into play, why don't you just go short? Why don't you sell 87s and get out at 68 and go buy a new truck or a new house or something? And I said, because I don't know that it's going that low, but I know what we're going to do when we get there. No question about it. We know what we're going to do when we get there, and we did it. So trades like that make me smile. You'll find that no matter what your strategy is or how you trade the markets, when you see a plan come together and perform the way that you know that it can, and to really be in a position where there really was no question about the trade being a winner. The only question was, could we stay patient and could we wait for it? Now, I would love to sit here and tell you can make a living like that. I watched a YouTube video from a gentleman yesterday, hugely popular online, hugely popular, hundreds and hundreds of thousands of viewers, market educator, was a trader on Wall Street back in the 1990s, was showing people how to trade stocks on the open. He says, I'm going to show you how to take 50,000 and manage it into 100,000 and 150 and 250,000. I'm not going to do that. I don't know anybody throwing $25,000 on stock trades using a 2-minute chart. I don't know that. However, I do know this. There was a lot of players waiting right down there at about $69 because, yeah, they believe that crude oil prices are down, and they do say, okay, the MOU supply is going to come back on the market probably in full force towards the end of the summer. But they also know that you're about one stray missile going into Dubai. You're one hit in Kuwait. You're the United States maybe decide that they don't want to do this anymore and take Karg Island. You're about one breath away from this thing being back at 100. So while I do love the idea of just taking a short and riding it down to the bottom, we knew where the market was going to be made, and it was going to be made at 69 in that opening war gap. That's where the market was made. That's where the big dogs stepped in. That's where the algos stepped in. Very important. Can you derive that from a 2-minute chart? No, you can't. So over time, you guys are going to start to do that with your own strategies. You're going to see, oh, man, I've been watching this level for a while. Is that important? Yeah, that level's important. You're going to be trading the 5-8-13 and just saying, okay, I'm up against a key number here, but I've also got an economic event coming out. What am I likely to expect? You'll be able to do all that. The only thing you have to do is stick with your strategy long enough and really develop it into not just a strategy, but a way of life. I mean, you believe me, like similar to what Naomi said with the 5-8-13 becoming her edge. Knows all about that strategy now after executing the trades and understanding how it really forms and functions. That's really what strategic trading is all about. Doesn't matter if you're using Fibonacci's, common sense, or if you're using just raw numbers with no indicators, just price action, ICT concepts. Eventually, you'll get to the point where you got a pretty good feeling about what's important and what isn't, and that's a big part of your psychology. So you can't really. I won't say you can't make a living trading trades like I just showed you, because the problem is they don't come around very often. How many times do you have a war, really, that you can cash in on an opening war gap? Doesn't happen often. But when it does happen, the big traders, they don't just bet a little bit. They bet a lot, and that trade down there made people's years. So I always love to see them set up and just nail them like that. It really is a good feeling because we deal with so many other types of trades that just get us into the tall grass like this one right here. Euro USD. Talked a lot about this level yesterday. Big time level, serious level, no question. Serious level. This is an inflection point for the Euro USD. No question about it. Long term, you're working right. This bullish flag, I sort of drew that a while back, but you can see that these lows down here right around 101.77 all the way to these highs up here right around 120. We've been trading above this 38% retracement right in this zone. It's I don't know. I don't know exactly what it is. 54, 113, 54. We've been trading right between that high, that 120 and that 115.50 forever. I mean, what is that one? That's going back to June of 2025. So over a year, just about a year, we've been trading in that zone. So when we're testing the bottom of this area, this rectangle we have, we're testing the bottom. That means we're testing support. And if this level doesn't hold, we're not just going a little bit lower, we're going a lot a bit lower. So the next port of call from here would be somewhere down maybe around 111.25. This thing could really, really tumble if this level doesn't hold up. I think it's going to hold up. I mean, I don't see really any evidence that leads me to believe that we're in big trouble here with regards to this level holding. Sort of traded beneath it, then sort of compression, wiped out just a lot of traders right in here, just a lot of liquidity, a lot of business being done. Came down here, sort of had a doji, rallied, came down here, sort of had a nice doji outside of the bully on a 30-minute chart and just sort of rallied beginning right during that U.S. pre-market hour. So when we start talking about the Euro USD, we talked about executing this trade. The actual level itself was about 113.50, went in at 113.62, didn't want to miss it. Not really much has happened just yet. Very, very tight conditions, still setting up pretty well. So in this situation, what I would personally be looking for is I would be looking for some sort of 4-hour pattern, like a hammer. Would love a hammer. Would absolutely love to see a hammer. Well, we don't have a hammer. We've got what I would call just junk setting up on this chart right around our key level. So I would say that we're going to need to get some accumulation somewhere. We're going to have to find some bids. I don't know where the market's going to find the bids, but they need to find them for this trade to be successful. No question about it. This is one that if you're long, I think you're probably on the right side of it right now. but be ready. I mean, if the 113.50 area gives way and we start to see the market really trend south, it's not just going a little bit down there. You're going more than likely right down to 112.50. Might have a little bit of an argument there. 113 might fight there. If you were going to hold longs from this zone, I probably would get chased out of it, somewhere. I mean, we could say right beneath that swing low, right down 113. I mean, it's no accident, guys. 113.25, 113.24, and then the bounce. Probably stop yourself out under there. If you want to make it a real cheap trade, if you want to take a little bit more risk, you'd let it go another 25 pips and stop yourself out underneath 113. But I have to tell you that if this level doesn't hold up right now and we don't start seeing the bids hit the Euro USD, maybe the USD gives back a little bit of its recent strength, then we're probably going to be really trying to fight an uphill battle. So modestly profitable right now. We got to wait and see exactly how this one pans out, though. Definitely going to be something I'm watching very closely in the coming sessions, that's for sure. Let me see. Eli, what about the gap at 85 on crude oil? 85. Oh, I see it. So you're saying right here, 85. Somewhere right in this zone, this gap down. It's on the borderline. If you were taking longs and you had a topside target, you probably could be shooting for 80 or 85. For me, I don't qualify it as a gap. We traded it right back there in early April. I'm looking for anything from 60 to 90 days between this gap area to the time it was traded. You can see this gap set up right there in the middle of June. So if we go back there to the middle of April, that's right on the borderline. I don't know that I would consider that a gap, but I see what you're saying. If you want to take a shot at it, you could. To me, what really wasn't enough of a duration. This gap area right here was news caused, and we hadn't traded, 68 going back, last July. So that's a really significant gap. That price point hadn't been traded for a long time. This one, we did trade it back in the middle of April, but you're right on that 60-day barrier, sort of a rule of thumb I like to use, 60 to 90 to 120. The longer, the better between the time when it was last traded. But I see what you're saying. It could definitely be a topside target for you. Me, I'm probably not going to consider that a gap, and it's not even in the same ballpark as the opening war gap. But great observation, because it is there. It is present, that's for sure. Let me see. DXY is crashing. Let's go ahead and take a look. We do want to take a look at the U.S. dollar, Japanese yen. We've also got a couple other things that we definitely wanted to look at. We already covered the NASDAQ 100. Week 26 started with a bang. Keir Starmer out is the UK PM head. S&P manufacturing PMIs. Those mean nothing. But, hey, they look good on a slide, right? S&P manufacturing PMIs don't get bogged down in any of that minutia right now. EIA crude oil inventory is sort of a big release. I think those inventories numbers we saw yesterday are definitely the reason for today's break, bullish break. The gap was there, of course, that attracted attention, but once we got there was a lot of people rethinking, hey, why are we so bearish here? Oil stocks are still way down. SPR is way down. Interesting stuff, but it was a pretty important release. It really was. Gave us a good look at the state of U.S. oil and how much was on hand, and it wasn't much, and it wasn't enough, I don't think, to weather much more of the Iran war. I think the U.S. needed the MOU. I think the world needed the MOU. I'm not sure that Iran needed the MOU. I just don't know. Not much is known about Iran. We really don't know much about them. So we've just got to keep going forward. We'll see if it holds. I think it will. I think the ceasefire holds at least through the summer. But in the fall and winter, I think it's a whole new ball game. I really do. Let me see. Thursday, PCE price index. We're going to talk a little bit about the numbers that came out today, but I don't want anybody to get too excited about them. There was a time when PCE and core PCE was a big deal, because that's what the Fed used. But remember Kevin Warsh and what he said at his first Fed installment. He said, we're going to be looking for new data points. We're going to look to stay more current. We're going to try to do our job better. We're going to get some task forces. PCE may not even figure into the equation for the next interest rate decision. So we can look at it and we can say, oh, it's a cute number. But I wouldn't get too carried away with thinking that it's important. I'm not sure, guys. So there's the news of the day. We had an absolutely huge amount of news events out today. I'm not really interested in many of them. We'll talk a little bit about them here in a second. But from a broad perspective, what could we really say about all this news? Just muddies the waters. It really does. Just clouds it. If you're an economist, it was probably a great day, like Christmas. If you're not an economist, then all this stuff probably doesn't mean much. It doesn't mean much to me. We can walk through core PCE price index month over month for May came in at 0.3%, sort of unchanged. GDP, that's going to be our fundamental of the day. Remember, this is probably what, the second revision to Q1, or it might be the third revision to Q1. But GDP Q over Q for quarter one came in at 2.1%, as opposed to 1.6% expected, and then also at 0.5% previous. So it was a significant number. It was really a significant number that came out. We'll talk about it more in a minute. Durable goods orders month over month for May. Remember, durable goods, those are your appliances, typically things you finance, washing machines, refrigerators, dishwashers. I may have to buy a lot of that stuff in the near future, so I'll be contributing to durable goods. But you'll be looking at negative 4.5% on durable goods, beneath 5%, and then way down from 8.5% the previous month, so not a good print. Initial jobless claims, we're always watching initial jobless claims. These are the people that are first going into that unemployment line. Initial jobless claims, what does it mean? 215,000 to underneath 225 expected and down from 227. So is that good or bad? It's positive. It's a positive move. It's positive. That means there's not as many people signing up for unemployment insurance. Initial jobless claims, typically one to watch every week, but I'm not sure it's a true 3-star event. PCE price index month over month came in at 0.4%, beneath 0.5 expected. So inflation sort of took a break there in May. Interesting. Fascinating stuff. Personal spending is up 0.7%. The reason why personal spending is up is because prices are high. So you just have to spend more money to survive. That essentially is what you're looking at. And then let me see, core durable goods orders, 1.3% beat expectations, but still down from the previous month. So, you could sit here and break these numbers down and talk about them all day. What we're going to do is we're going to talk a little bit about GDP as being the headliner. You can see there's still more of these numbers. Really a lot of stuff came out today. I wouldn't really focus on any of it. I think GDP is probably your headliner today. PCE, flat. All right, that's sort of the theme, but the Fed may not even use PCE anymore. So let's take a look. The U.S. economy expanded at an annualized 2.1% in Q1 2026, revised up from 1.6% in the second estimate and above 0.5% of Q4 of 2025. So it's an improvement. No question about it. Nice improvement. And there's your chart. There's your year-long chart. You can see GDP quarterly, really a brutal quarter right there back in 2025. And then you can see the growth. This growth here is very, very surprising. But remember, Q1, you didn't really get the full meat of this Iran war baked in to your GDP. So we're looking for Q2 probably to be bad, and Q2 is coming up relatively soon. So Q1 was solid. You had a pretty good January, pretty good February, and then March, everything started going crazy, and then April, and then May, and now June. So interesting stuff here. I'm not too worried about it, but I do think that it was a pretty good number. I don't think it was a great number, and we're certainly going to be down, I would say, beneath those levels from last fall. So we'll see exactly what happens in Q2, but it could be I won't call it a rainmaker. I won't call it a rainmaker, but I'll say that it may not be as good as we think. That's for sure. That's for sure. All right, let's see. I got a couple of questions in the live chat. I got way behind. Believe me, if you guys have anything to ask, be sure to throw it out there. Don't be shy. Don't be shy. If I don't, there's a couple of rules on this stream. If I don't know, I won't BS you. And if it makes money, it's the right answer. That's all there is to it. All right, 512 Eli. Warsh said he's not worried about the number after the decimal. So 2.9% is the new interested goal. It's a good point, Eli. If he's not worried about the number to the right of the decimal, but it is 2.9, that's essentially 3. Interesting way to look at it, right? I think they're going to revise up the Fed's target. The Fed's had their target at 2% for seemingly ever. I think that the Fed's numbers are going to be. I think they're going to probably start accepting 2.5 and 3%. If they do that, what that ensures, it's going to ensure stock market growth and then also a depreciation of the U.S. dollar, which, believe it or not, I think they want the dollar somewhere down around 92, and right now it's at about 101. So we're definitely going to be looking at that. Okay, Japanese yen. BOJ, surprisingly quiet. Look at what's happening right here at 162. I read an article earlier today with an interest rate hike. Could the U.S. dollar Japanese yen go to 165? Maybe, but you really are starting to see what's going on, what's happening here in this market. No question about it. We're getting that daily compression. Nice big bullish run up to 162. This is compression. This reminds me a lot of the SpaceX stock, which is compressed right around 150. This is compression right at 162. Even what was the high there? 161.95. So if you're trading it, let's say you're holding shorts. I don't hate it. But listen, if you're going to hold shorts, and you're going to say, okay, Shane, I want to trade right now. I want to sell. I mean, let's just go short. Okay, fine. Let's go short. If you're holding shorts in the Japanese yen, a couple of things to realize. Number one, you're fighting a stiff trend. The uptrend is there. It's present. It's been there, this entire year, essentially, going back to sort of the chaos. Well, I mean, that goes back to about May, but you can see where we were back here in February. This is an uptrend, no question about it. So when we sit there and we look at this price action, number one, if we're holding shorts, we're definitely going against the trend. Now, what do we have going for us? Well, what we have going for us is the key level. It means that about the only thing you have going for you in this trade, let's say if we just took a market short, what's the only good thing about this? My stop loss location. I know exactly where to put it. Somewhere up above 162, 162.09s, 162.16s, 162.29s. It really doesn't matter where you put it up here as long as you're managing your risk. So let's say that's your trade. So what do you have to get out of a take profit to make this worth it? 308, something like that, 317. Is that likely? Does that look likely? Just look at the price action here. Doesn't look likely to me. It really doesn't look likely. The reason why? Bidders, certainly they're winning the game, but they're not winning it by very much. You're going to have to see a significant pullback down here to get us filled up to make this trade even worth our while. Can we do anything better than that? Well, we could trade this thing really, really tight, go with like an 09 stop, and then potentially look for something like this. Is something like that possible? Let's dial it into a 1-to-1. Is that possible? 160, 149. So we need about a 39 pip pullback. That's possible. Is it likely? The pressure's up. The pressure's on 162. So even though you could take a trade like this, which is fine, I mean, I really can't poke a hole in it. I said, well, you've got a stop out point. You got your risk dialed in, so there's no real reason to sit around and go, this is the worst trade of all time, because it really isn't. You got a chance. What's a better trade? Break up above 162, and then we start buying pullbacks after the bullish break is on. Or maybe we see a break up above 162 and then one of those inverted hammers like we had on SpaceX, something like that. That could be pretty good. So even though this isn't a bad trade, there's better setups out there. And unfortunately, they all revolve around waiting to see what happens at 162, realistically. So if you wanted to hold shorts, I really couldn't blame you because you do have a legit stop out point over a key level. 162 is the game. 161.95 to 62. We've already seen this level tested several times. The sellers have defended it. Can they defend it forever? Remember, anytime you're talking about horizontal support and resistance or key levels, it's like knocking on a door. You knock long enough, eventually the door opens up. So be cognizant of the importance of 162 in this pair, that's for sure. If there's any more markets out there, I'm more than happy to look at them. If not, we might just put a pin in it and circle back around and join up again tomorrow. We'll talk weekend war trading. We definitely want to do that. Let's go back over to our SpaceX here. Let's see what's happening intraday. I'll go take it down to a 30-minute chart. I mean, 30-minute chart, I hate to just draw patterns for the sake of drawing patterns, but there's a pattern there. Descending triangle, descending wedge, descending pennant. I don't even think that's a pattern, but you could definitely say it's a descending wedge. 30-minute chart, though. I mean, it's a low time frames. Take what you want with it, but what I would really be focused on here is if I was trading SpaceX. That wedge is very real. The market's tightening up. Markets tighten, they go from big to small. They tighten, and then they pop. And when they pop, they move. Anytime, and I mean anytime, you see a market setting up like this in front of a key number, you got to watch it. You got to be very careful because 150. What? Think about what that pattern's showing you right now. What's happening right above 150? You're eating up bidders. Bids. Yet the market keeps coming back down to that level. So what does that mean? Bids. And maybe the next time it comes down, bids. What happens to price when we go from bids to bids? There's not as many bidders. And as soon as that buy side liquidity is gone, just above a key level like 150, boom. You have to go find another level where there's bidders. Probably 135. I don't know anybody that probably wouldn't be excited at 135 to join the institutional money, the big dogs that bought in from there. No question about it. That's going to be an attractive zone for people to buy SpaceX. I don't really have a problem with it. Could we wash out 135? Sure. Will it happen? I don't know. I don't know that. Very hard to say. Very, very hard to say. So something to think about there. Let's take a look at our market profile trade. Are we in trouble yet? Not really. Welcome to market profile trading. There's your NASDAQ. How does this trade probably unfold? Number one, we probably should be buying the point of control. That would be a better entry than what we did, but we took a shot at it, right? Always demo dollars. These are demo dollars, but the NQ is a very significant contract because the volatility is so big. It's so big. But from a symmetry or a market profile standpoint, has anything happened in this trade yet that surprised us? No, nothing. That's why a lot of traders don't like market profile because it can be really expensive to trade. Something like this, taking a position here, probably not the best entry. We probably should have been right here. Still, though, trade's not over. We're traded right back down. We had a nice rally just like this one, back down to the point of control, trading sort of right at the days the U.S. Sessions value area or the Sessions value area. We got a stop out point right here. I don't particularly like it, but you have to cut it off somewhere. You can't just let this thing break and trend against you late in the day. More than likely, on a trade like this, you're going to be waiting around for the last hour of the session to get your rally, and that was sort of the question that was addressed. Can the NQ rally into the close again? I would say that it can, but as far as I'm concerned, I mean, this is just dead fish, flat trading, and in this situation, the B formation's pretty good. You got a pretty good chance of really, I guess the B right now would be somewhere right in there, wouldn't it? So maybe you'd be looking at something like that. The problem is your downside risk is too big, so you got to really shoot for that rally at the end of the day. And if you want to be a hero and try to make some money, then you take that shot. You take that shot up into the pre-U.S. market value area. You'd certainly do that. But as of right now, I mean, not much happening. Coming up on 2 p.m. Eastern. Trade's negative. Location wasn't great. We bought into the middle of sort of a mess. Wait and see what happens. I anticipate bidders to step in right there at the point of control, might mill around in here. The only real thing that you'd be in trouble with is if, in fact, you get stopped out before this thing gets to moving. So is it a tough trade? Yeah, it's not even close to being the same caliber as our U.S. oil trade. Not even close. It's not even the same game. That's why I listen to folks that, are trading 2-minute charts, and if you're making money, great. And if you got a track record and you're stacking chips, that's fine. But don't think that a 2-minute chart trade is the same as that U.S. oil trade we spent time on. Don't think that. It's not the thing. Let me see. NQ is crashing, but it's not really. See, that's the thing, though, Eli. It's not really crashing. I'm not defending the trade idea. I'm just saying that, if it's not performing very well, but is it crashing? No. 30-minute market profile. What is this thing doing? It's behaving the way that it would. That's the market structure. Now, if you go down to a 1 minute, the world's ending. It's a market crash. It's a rout. We're getting killed. We're getting crushed. And then you back it off to a 30-minute and you go, well, not really. It's sort of developing the way we thought it was probably going to develop. The idea that it was going to go up and fill that gap right away in the mid-session, probably not. Timing wasn't great on it. You'd love to take a trade like that from the point of control going into power hour later today. I think that would give you a real chance at least to get in and out of the market quickly. For this, you take a location like that, you're just sort of stuck with it. That's why the initial stop loss is huge. That's why having a strategy is huge, and money management really is everything. That's for sure. Absolutely for sure. Well, we'll see how that one fares later today. It's not out of the woods yet. I don't know that it's going to produce much of anything, but, it may. That's for sure. As far as some of our other markets that we're looking at here, I had a couple other Forex pairs loaded up. I'm on our MT5 platform. You can see I haven't shown you any MT5 today. That's okay. We'll do some tomorrow. But 5-minute charts, I really wanted to stress this point as far as Forex goes. Euro, Great Britain, pound, Australian dollar, US dollar. When we start talking about 5-minute Forex and doing things like this, having that RSI is really important because you can see both of these markets are just flatlined. I mean, you're right around the 50 value in the RSI, and what that means is just nothing is moving. Nothing's moving. You could back off to, say, a 4-hour chart and potentially get a trade there in the Aussie, something like that. Well, there it is. So there's your 4-hour chart, 4-hour Aussie trade. Is that a pretty good trade? 9 EMA cross. If you're not familiar with the strategy, don't worry about it. But that right there, essentially, could be your trade, something like that. Bring it right down to, say, almost a 1-to-1, maybe a 1.5-to-1. That's not a bad trade, and the reason why it is that you've got the nice buy signal. Price was sort of oversold down here. I'm in this Aussie. Then you came back up. We got the signal right there. There's our algo. When we cross over the 9 EMA, it gives us a nice signal there, a nice gold candle, and now you've sort of got your position long. Couple of places you could put your stop loss. Number one, you could put it right beneath your trigger bar here on a 4-hour. I don't have a problem with that. That gives you plenty of time potentially to get this symmetry going in the right direction. So I don't mind that. In this case, I wouldn't necessarily do that, though. And the reason why is you've got this really key area of downside support that's developed sort of right where our stop loss is. You want to use that to your advantage. So stop loss right beneath this area right in here sort of lines up perfectly with where we were oversold. And now you're looking to grab this bid to the top side and take a position. I mean, it's going to be a true, I mean, that's a swing trade. There's no two ways about it, but that is sort of it's similar to the play we have on the euro where you're waiting for the dollar to give back some of what it's taken over the last week and a half. And so for me, I'm looking at this closely, just thinking, man, is that that might be the bottom of the Aussie for the week. Puts us into a pretty good late week position. That's not a bad play to take that trade ahead of the New York close, ahead of the Forex close on Sunday. It's not bad. Is it great? Well, the dollar's been strong, so we definitely are fighting a trend. But should the pressure subside? Well, we've been trending for about a week, maybe a little bit more than a week on the DXY, the USD. I would say it's not a bad trade at all. Not a bad trade. Let me see. What about 29.6? Eli, I'm a hometown hero, Shane. Hometown hero, huh? Man, there's lots of hometown heroes. Police officers, firefighters, folks that do public works, charity workers, philanthropists. It's all there. Lots of ways to be a hometown hero. Not many of them in the markets, though. So, all right. Last thing I'm going to do here today is this. Great example of market profile trading. That market went right down to our point of control and bounced. So what's happening to us right now? Compression above the point of control. Got a real good chance there. Personally, I think that's way too ambitious. I'm right down in there. I want to just fill that chain, and I want to fill that opening chain in and potentially get paid off. Market profile trading can be fun. This is a market profile. If you've never seen one, it's a time price offering chart, a TPO chart, market profile strategy. Fantastic for when the market's flat out. Great summertime trading as well. Essentially, all you really have to do is wait for your volume numbers to set up, look at what formations you have, and just attack accordingly. Not a bad way to do business, that's for sure. It just takes some time, some experience of working with it, and patience. That's for sure. All right, everybody, I'm going to go ahead and sign off. I do apologize for the technical difficulties at the beginning of the stream. If you're new, I'm sure you probably tuned out. That's okay. I forgot all about that. I did have to just update all my Windows security, Google Chrome, and when you update all that stuff, a lot of your factory settings, a lot of your settings get reset, and what happened was my microphone got reset to the default, which I don't even have a default. So we had to turn the mic on and, of course, troubleshoot it. So check all the connections, make sure it's plugged in. Something didn't, knock it loose, and what a pain. So I do apologize for that. We got to fix pretty quick, though. That's for sure. All right, everybody, that's a wrap for today. Key levels, 150 in SpaceX. We're still looking at that yen, maybe holding yen shorts. I mean, we took the shorts, paying off pretty well right now, but I don't know, 200 levels big. SpaceX 150 is huge. Euro USD trading about 113.77. I like it. Aussie coming in pretty good, and it does look like the NQ setting up for a late day run. We'll just wait and see. All right, everybody, have a fantastic trading day. Thank you for joining me, Naomi and 512 Eli, Bobby Bob. Always a pleasure to be here, guys. If you have any questions at all, head on over to howtotrade.com. Get your free account. Go ahead and click on my picture. Send me a message. And also, if you want to send any messages on YouTube, I answer all those as well, no matter what channel you may be looking at. All right, everybody, that's a wrap for today. Have a fantastic trading session. And looky, our NASDAQ, our NQ trades going to the green. That's going to hit. That's going to finish nice. But in any case, have a fantastic trading session, a better trading week. We'll be back tomorrow about the same time. And as always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.